In 2025, I looked at 239 stocks, but I invested in only one of them. In 2026, I intend to do the same thing, looking at more stocks, but of course being more selective. For me, as a value investor, having a bottom-up approach, it is a little hard to tell you in which sector, country I'm going to look at, because this is not how I approach investing. I look at companies first, and then from these companies, maybe I'm going to look at a specific sector, industry, and invest in. But of course, like any investor, I will have to look at my own portfolio, because every now and then you have to take the decision. What do you make? Do you sell? Do you take profits? Did you make a mistake? What do you have to do? But not every company in your portfolio deserves the same attention. For example, you look at Meta, a company I bought in 2022. I already trimmed my position. Now it is around 4%. I'm not so worried about it. Whatever happens, okay, it's a good company, a good compounder. So I'm not going to look at it. I don't even have to look at the earnings report every quarter. I will look at them, but it's not a necessity. What matters if the fundamentals are changing, if they are entering a new business and spending even more capex than they are doing right now, which I don't think they will do, then we have to look at it again. Also, if let's say the stock price crashes by 50%, then it might look attractive and I will look at it again. Same with Apple. I bought in 2016. Let it compound. Don't waste time on compounders. But there are some businesses in my portfolio that need more attention in 2026. The most important one will be Lululemon. First, as I said, I made a mistake about the intrinsic value of Lululemon. It is worth less than I thought. So I had to remove part of the intrinsic value. And there are things I did not consider. That's why I made this mistake. Now I need to look at these things again, how they're progressing, whether I should still be owning Lululemon. And also there are many things happening within the company. There's the founder, Chip Wilson, who's trying to put new directors on the board. He's in a proxy fight with the company. The company itself is looking for a new CEO. And there's Elliott hedge fund being an activist investor in the company. Lululemon today is a turnaround. That's why it is important to look at it to know if all these different elements, the founder, the activist investor, the new management that are going to come, all these different elements, what's happening in China, everything else is going to affect the company long term, and whether it will keep being a compounder that it was in the past decades. Another company in my portfolio in a similar situation would be Evolution Gaming. As you know, there are many different headwinds with this company right now. For example, in Asia, there are the cyber attacks. People are trying to copy their games, stealing their IP. In Europe, there's ring fencing because of regulation which is happening. North America, they have yet to fully expand into the market. There are many different factors happening with Evolution. The company used to grow by 20-25% annually, which is not happening anymore. Can they grow again? Can they deal with all these matters? Will they keep buying back shares? All these are important things that we need to look at in 2026 for this particular company. There's one company that did well in 2025, Celsius, which I'm going to look at, because the market here was ahead of the fundamentals. We have yet to see the implementation of Rockstar, Alani Nu into the Celsius system with their partnership with Pepsi. We have yet to see this, but the market has already reacted to it. The stock price is going up. We have to see how it goes. And if, let's say, things take more time than usual, I'm not going to sell unless the fundamentals changes. I believe in the management of Celsius. What about stocks that are on my watch list? There are a few ones that I look at in 2025 and I'm interested in. I'm waiting for, let's say, the price to go lower or bigger margin of safety to do more research. One of them is Root. It is insurance. It is a new type of insurance and I need to do more research on this, especially with that deal with Carvana. It looks undervalued, but I don't see the margin of safety yet. So Root is one of them. Adobe doesn't look that undervalued, but it could be. It's a great company, great compounder. I don't like the management so much, but we'll see in 2026. I use the product, hard to use, I like them, but we'll see in 2026 where the price falls, and if it goes further, of course, I will be looking more into the company. PayPal is another one. I'm not going to invest in PayPal, but I invested in the past and I want to follow it, especially with the old honey scandal happening. It's interesting to follow, just like this. Same with the Warner Bros. Discovery, because I used to own it in the past. I want to know what's happening. And of course, Netflix. If these deals happen, what happens to the stock price of Netflix? Will it be a good buying opportunity? I love Netflix. Why not? I recently talked about the deal Netflix, Warner Bros. Discovery, Paramount on Substack. I talk about it. I wrote all the different scenarios, what may happen, may not happen, what the different players in this deal, and how can we approach this as a shareholder of Netflix, Warner Bros. Discovery, or even Paramount. Who wins from this? You can read everything. This newsletter, it's a weekly newsletter. It's completely for free. It will always remain free, so please do check it out. Another company I recently looked at was Grab. I love the management. I loved how the company is run, their growth potential, but the issue is that I don't know the Southeast Asian market enough yet, and I need to do more research. I need to look at the other competitors, at other companies in this region, just to understand the company better. There are sectors that are not doing well, some industries, for example, the home builders. All of the stocks looking that they are trading at 6 times earnings, 7 times earnings, which looks undervalued, but this is cyclical. And I'm not really sure where we are in the cycle. So I have to understand this. I have to study this. It's not just about looking at companies, this cheap you buy. Even oil prices are falling or low compared to what they used to be in the past. And some oil companies look undervalued. But I don't want to buy right now. I need a bigger margin of safety with cyclical stocks. But it's always good to know what's happening, where we are in those cycles. And you buy when prices are low, for example, just like I bought copper a few years ago with Freeport-McMoRan. You may be wondering, what about Wise? What about Crocs? These companies are about half of my portfolio. And we know that in 2025, they did not do well. This is the main reason why my portfolio underperformed in 2025. But there are not much happening with the companies themselves. We'll look at Wise bringing new banks on the platform. We'll look at Crocs, what's happening with the sales in China, what's happening in the sales in the US, what's happening with Heidul. But these are things we already know. And we can expect what will happen. Whatever happens with the stock price, it moves by 60% in a year. It doesn't matter to me. If it goes up, good. Goes down, Crocs will buy back shares. And as for Wise, this is long-term compounder. If you want to know why I like companies like Wise and especially Crocs, I will recommend you watch this video next about Crocs. Have a nice day and goodbye.